Hello and welcome to CNBC TV18, and this is where we are here to talk about Reliance Industries. Reliance just reported numbers, and the net profit on a consolidated level has come in at 26,994 crore rupees, which compares with 19,407 crore rupees on a sequential basis, and that compares with 15,138 crore rupees on a YOY basis. Do remember, this number is at a 5-quarter high, so looking good for Reliance Industries as far as the net profits are concerned. But do note, the other income component that has come in at 15,119 crore rupees, which compares with a number of 3,983 crore rupees. This is on a YOY basis. If we look at the numbers overall, in terms of profits, of course, we've seen that it is coming as 26,994 crore rupees. The revenue is at 2.44 lakh crore rupees. That's a decline on a sequential basis, but that was expected because remember, there was a shutdown, a maintenance shutdown that the company had taken in the month of April, and also because raw material prices, they were lower this time around. So that's the reason you will see that that revenues have declined on a quarter-on-quarter basis, but they are higher on a YOY basis. Also remember, Reliance had sold stake in Asian Paints in the quarter gone by, and other income includes Asian Paints stake sale amount, which is around 8,900 crore rupees. So that explains the increase that we have seen in other income on a quarter-on-quarter and on a YOY basis as well. Of course, we'll talk about the different segments as well. Alto Chemicals expected to do really well this time around because of better spreads across the board. So if we talk about the segmental EBITDA for Alto Chemicals, it has come in at 14,511 crore rupees, which is largely in line with what the street was working with. It is an increase on a YOY basis, and in terms of oil and gas, it was expected to see a decline in terms of EBITDA because the production this time around has been lower. That's been the case for all the oil and gas producers. So this is what these two segments look like. But let me go across to Mangalam now. What is retail looking like?
Retail has been a growth driver once again. You know, the street was working with double-digit growth. That's exactly what the company has reported as well. And this, at a time when consumer sentiment has been, fairly subdued. So the revenue growth in the retail business has been good, 11.3%. Remember, the company has been rationalizing some of their store openings, working on operating leverage out here as well. So not only has the revenue grown by close to 11%, if you look at the retail EBITDA as well, that's coming at 6,381 crores, which implies a growth of close to over 12% or so. So we have a decent amount of growth coming in the retail business, both on the revenue and the EBITDA front. Importantly, while they were rationalizing and that rationalizing exercises have completed, they've begun adding more stores as well. So this quarter, they've added over 380 stores, and this is much higher than the street expectations of 225 to 250 stores. So retail business at 84,172 crores, an 11% growth over the same quarter last year, implies the retail business continuing its near $10 billion quarterly run rate when it comes to the revenue, defying the weakness that we're seeing in all consumer products here because of the sheer growth and scale that Reliance Retail operates at.
Okay, I still don't have Jio's numbers, so we're going to wait by for that. But the expectation was it's going to be a stable quarter, some improvement in the subscribers, some increase in the pricing, but we'll wait by for those numbers.
Okay, we'll do that. It is also an important segment that we'll talk about. But let's get in Sunny Agrawal, Head Fundamental Research Retail Desk at SBI Securities, joining us now. Sunny, good evening. Thank you for joining in. You've heard the first cut for Reliance Industries. Retail has done well. Numbers are largely in line with estimates for the Alto Chemicals business as well, despite the maintenance shutdown that the company had taken in the month of April. What's your take?
Yeah, good evening. I think, number has been pretty much in line with expectation. I think retail, again, continues to be the growth driver. So as Mangalam was telling, close to 12% growth on top line and EBITDA. I think, again, telecom, although the details are not out, I believe telecom, again, should see a decent growth in terms of ARPU and subscriber addition. As discussed earlier also, I think now non-oil and gas business, which is a consumer-facing business, is now close to contributing close to 45 to 50% at EBIT level. And over the period of next 2 years, we expect that the contribution from consumer-facing business should increase going forward. And that should lead to a further re-rating of the businesses as going forward, we may see a demerger and listing of the consumer-facing businesses also.
But when do you expect, Sunny, these demerger exercises to take place? Because There were earlier reports that maybe it may not happen immediately, may take some time. But how much of this demerger possibility have analysts ascribed to Reliance right now? And what is the sort of valuation unlock upside that analysts are working with?
I think, again, one has to keep in mind that this demerger and the listing process of these consumer-facing businesses will be a kind of global event, not a local event. So I believe as the global uncertainties wane and as there is a more clarity on growth path at global level and domestic level, maybe the company will go ahead with an demerger and listing of consumer-facing businesses. What analysts are working with, we believe that the consumer-facing business in all on some of the part basis comes to the value on a per share basis comes to close to 1,050 to 1,100 rupees at the current juncture.
Okay, we've got, I think, two numbers from Reliance Jio. That's the subscriber base at nearly 500 million. 498.1 million is the subscriber base. This implies a quarterly addition of 9.9 million subscribers. So quarter on quarter, subscribers for Reliance Jio, the telecom business, has gone up by 9.9 million. This is higher than the 6.1 million subscriber addition that we had. And you know, the TRAI data, which gives you a monthly number of the addition, it was out for April, May. And for the last couple of months, we've been observing that Jio has been gaining more subscribers than Bharti Airtel, pretty much indicating that, you know, maybe it's gaining some market share of late. So 9.9 million by way of subscriber addition for Jio is ahead of estimates, which were closer to about 7.5, 8 million, maybe about 8 to 8.5 million. So subscriber addition has been very strong for Reliance Jio at 9.9, and on a year-on-year basis, this would imply a growth of close to about 2% in the overall subscriber base. The ARPU for the company is up 1.2% on a quarter-on-quarter basis and 15% on a year-on-year basis, coming in at 208.7. Again, in line with expectations. So Jio's actually done well, both on subscribers and on the ARPU increase.
Okay, so Jio has done well, so has the retail business. And we've been talking about how all-to-chemicals business is largely in line. And that is because the decline, of course, we've seen is because of the maintenance shutdown that the company had taken. Parag Thakkar is joining us now. Parag, good evening. Thanks a lot for joining in. You have heard the numbers across all the segments. What's your take on these numbers? Segment-wise, if you can tell us what was expected and how did the overall numbers look?
I think the Jio business has done extremely well. As you were saying, they have added 99 lakh subscribers in the Q1 itself. Plus, I think ARPU was unexpected like at 208. So if I have read the number correctly, it is 18,000 crore EBITDA for Jio business, and which I think is a very good number. It should be a 20% YOY jump. The retail business, of course, 6,380 crore EBITDA number, which I read, which means that in this year, Reliance retail can do 27 to 28,000 crore of EBITDA. And we know the big retailers in this country are trading at 50 times EBITDA. So Reliance retail value can be as high as 12 to 13 lakh crores, in which Reliance owns 86% stake. So I think there's a huge value unlocking there. Plus Jio also, of course, now looking at Bharti's valuation, in fact, Jio can be valued at 12 lakh crores easily, where again Reliance owns 66% stake. So I would say that, and refining and petchem, of course, there was a shutdown. If the shutdown would not have been there, I think the EBITDA number of oil-to-chemical business would have been easily above 15,300 crore. So I would say that it's a 60,000 crore annual EBITDA business, and they have such an integrated business model that even when others in the world are suffering on refining and petchem businesses, and the cycle is down, they easily can make 55 to 60,000 crore EBITDA. So I would say that it's the most resilient business. Plus, I would like to draw attention to one thing, that when people talk about Reliance results, people talk about net debt and capex and all. I would just like to say that when a company makes 1,70,000, 80,000 crore kind of EBITDA, the net debt number of 1,20,000 crore excluding spectrum liability is too low. And if you see, Reliance EBITDA is 1,80,000 crore and net interest cost is below 12,000 crores. So net interest cost is less than 5% of the EBITDA. So why people worry about net debt and capex and all, that I really don't understand.
Just one quick clarification. Parag, that Jio number that you spoke about, 18,000 at the EBITDA level, that is for Jio platforms, which includes the telecom Jio, but it also includes all the other digital services like, Jio Mart, etc. So we're waiting by still for Jio's EBITDA number. The number you looked at, 18,000 plus crore, was for Jio Platforms Limited.
Right. And, now we have the press release as well. A lot of interesting details coming in from the retail business. We've been talking about how the company has been rationalizing its stores to improve operating leverage. And that explains why the EBITDA has actually grown faster than the revenue, which itself has grown at around 11%. So EBITDA growing at 12.7%. So the company's added 388 new stores in the previous quarter. And if you look at the area under operation from the same time last year to now, there has actually been a reduction of 4.6%. So same time last year, they had about 81.3 million square feet as area under operation. Now that number has been rationalized to 77.6 million. And while that happened, the revenues grew by almost 12%, which means that revenue per square foot, which is an important metric in retail operations, or operational efficiency measurement, has increased by 16.6%. So from 9,300 rupees per square foot, the revenue per square foot for retail has increased to 10,846. And that explains why the EBITDA has actually grown much faster. Now, a lot on the street would be quibbling that, why is it that it's not grown in mid-teens as against, 11% that it has grown right now? Because remember, this was also a time when consumer electronics and devices were impacted by early onset of monsoons. So that recovery is currently underway. Add to that, the customer base of the business is now 35.8 million. And JioMart, they've been ramping up their quick commerce business. So hyper-local deliveries have actually grown 68% quarter on quarter and over 175% year on year when it comes to daily growth. And you have business for fashion and lifestyle, which did well. Grocery itself has done well. And add to this, they're also making a lot of acquisitions. This morning itself, we got the announcement of them having acquired Kelvinator. So that does well for them as well. The only thing we have to watch out for, how Reliance consumer brands have performed, which is the Reliance FMCG vertical, which last year did about 11,450 crores in revenue, among the top FMCG companies in just the 2 years of its operations.
Okay, I think we have Balaji also with us. In case we have, Balaji, wanted to get your thoughts in. Yeah, on so the numbers that we have, subscriber is 498.1 million. So that's an addition of 9.9 million subscribers quarter on quarter and an ARPU of 208.7. They've also indicated that the overall, I think the 5G customers have crossed 200 million. Air Fiber is now the largest FWA service globally. So these are some more details that we have. You want to quickly share your thoughts? Balaji?
Okay, we'll just go to him in a bit. We also have Prakash Devan joining in now. Prakash, your thoughts on the numbers? Retail has done well, Jio has done well. Oil to chemicals, of course, you were expecting the decline because of the maintenance shutdown that came by. Oil and gas because of the natural production going lower. But overall, how did the numbers look to you?
No, I think it's one of the best quarters in the many quarters that have gone by, and especially when I say best, because two of the biggest growth engines in form of retail and Jio have delivered spectacular numbers. O2C, of course, is a very mature business, and exploration was likely to be impacted, and it has done the same. But my sense is that O2C also, if you see just the volumes that they have been able to do in terms of improvement in taking advantage of the improvement in transportation, fuel cracks, the PVC, PP, deltas, all of that have been so instrumental in garnering the strong EBITDA. But the all eyes are going to be on retail and Jio for the simple reason that a lot of the milestones that we were anticipating in these two new businesses have started crystallizing. So, for example, the 20 million broadband subscribers, it's an amazing feat. It's still not made such a big splash, but we already have 2 crore households getting connected. So this could continue to chug along very well. And on the retail side, as Mangalam was explaining, the efficacy of the footprint that they've created, that is something which is remarkably high. It creates a huge delta between them and the second biggest player or the other players in the market. So my sense is that these are areas that will get the company multiple that is far different and superior to what it has been getting as an O2C player. So very, very nice, decent numbers. You could keep quibbling about a few things here and there, but I think for a base like this, and of course, Reliance will always have something or the other which may not work for itself, given the large setup that it is. But within what has worked is definitely very salient.
Balaji, let me try connecting with you. Can you hear us?
Yeah, I can.
Yeah, just wanted to get your thoughts in. And as Prakash was pointing out, even now broadband has hit 20 million. So that adds to the company's ARPUs as it gains traction.
Right, that's right. Yes. Because the home broadband comes with a lot higher ARPU compared to mobile. So, the rising mix in favor of home broadband is a positive from an ARPU perspective.
And the subscriber numbers and ARPU, is it ahead of your estimate or in line?
It is largely in line, because if you look at the TRAI numbers, it was very evident that Jio's momentum was very strong, not only in just mobile, but also in fixed line, be it FTTH or FWA. So I think the numbers are in line, strong, but nonetheless in line.
But you think this time there is a slightly bigger beat, or the numbers are more positive than we had perhaps last quarter? I mean, last quarter also they were broadly in line. But do you think this time it's slightly erring on the side of a positive surprise?
Yeah, I think one can say that. Yeah. Okay. Because if you look at the FWA subscriber additions in particular, there has been a clear acceleration in momentum, especially starting April.
Okay, all right. We get that, Balaji. Prakash, I wanted your take on the oil to chemicals business. Despite it being impacted by the maintenance shutdown that has come by now, do the fundamentals or the macro support the business going forward? What's your take on the outlook for the oil to chemicals business going forward?
So I think, what you need to look at is things which are poised to improve from here on. Of course, the shutdown will help get better, efficient metrics in the quarters to come. But the rate of production at 26.4 MMSCMD of gas itself is something which, is significant enough for them to build up from here. Exploration has always been a challenge, but they've been able to overcome the setbacks that, we've seen in some of the quarters. And O2C ended up dragging the whole thing. But, the way the setup is now, you're talking about an O2C EBITDA itself, which is close to 11%, right? And that is something which double digits itself is like, to sustain that in double digits itself is a very good achievement. So I'm quite happy with the way, in spite of the shutdown, all of this has happened. And remember, gas is something which they're doing a lot of work on in terms of value addition in that entire value chain. So it's not going to stop at just exploration and that's it. There's lots that's happening. And all of that, all this output that they've been able to generate, even if it's lower than what was last quarter or something, will probably, start helping ramp up things without much of increased debt or increased capex in the business. So the efficiency, the ROEs will probably improve for the O2C business far better than what we've seen in the past.
What Zudio has done has told everyone else on the street what value fashion is all about. Zudio itself is now growing at 20% after reaching a certain base. But, this morning we had Shoppers Stop, which reported in numbers. Their value fashion vertical, Intune, grew doubled in over the last year. And guess what? Reliance's business is doing. So they have these emerging brands that they've put in the value fashion and, value products cohort. So Gap, Azort and U-Star, that's grown 59%.
Gap is value?
Yeah, bridge to luxury. That's what it is. Okay. And then you have U-Star as well.
U-Star I get, but...
Yeah, so, they've grown 59% year on year. Now they have 170 stores. So that's how...
And what's the size of this?
We don't know the absolute number. That's grown 59%. And Shein itself, we were all talking about how Reliance has bought Shein. It was not very long ago. It's already crossed 2 million downloads in the app form. And they have 20,000 products live on it. So anyone who's looking at getting the Shein app, there are 2 million people of them already and 20,000 live options on them.
Clearly, everyone's growing and doing well in this space now.
Yep.
This is outstanding.
This is outstanding, yeah. So you start growing at 59%. Prakash, you have a word on that? I'm not sure. Prakash, you have a word on the value fashion business. You start growing at 59%. Shein having 2 million app downloads. This could be another engine of growth.
So I hope I'm not on a very scratchy line, Mangalam, but what I can tell you on the retail side, what's very standing out clearly is the consumer brands business, which was we heard sometime back would get packaged off as a separate entity or separate vertical, itself is now about 14% of the revenue, right? So and the way the new brands are getting added to the portfolio, you have a far more superior margin profile once volumes pick up, and this is just the second year of operation. It's not even been too long. So I think while they continue to expand store count and, the MSF under operation, all of that is very impressive, but it's the way, more value is being created within the retail setup. Pieces of that are getting much more stronger. And that's, imagine if there's 11,500 crores odd sales on consumer brands becomes close to 25,000 in the next year and a half, 2 years. You have, this is going to be competing with all other leading FMCG companies in India, which have been there for years. So, that's the kind of, value addition that will eventually be much more impressive for stakeholders, for any, investor to look at retail as a standalone business.
Yeah. Absolutely, Prakash. Take that point. In fact, Mukesh Ambani also says that Reliance will continue its stellar track record of doubling every 4 to 5 years. So that's a big statement coming in. Gentlemen, thank you so much for joining us this evening with your take and your insights on Reliance Industries results. If you've just tuned in, Reliance Industries just reported numbers a while back. Revenues have come in at 2.44 lakh crore rupees. Net profits at 26,994 crore rupees. Also, there's an other income component because of Asian Paints stake sale, which amounts to 8,924 crore rupees. Overall, margins have come in at 17.6%, aided by strong businesses, that is retail and Jio. Oil to chemicals largely in line with estimates. Oil and gas did see some decline, but that was expected because of a fall in production this time around in KG Basin. Thank you so much for tuning in. Stay tuned to CNBC TV 18 for more news and updates.